All right, well, let's take a look at what our topic is today. It's bridging the value gap. And what do you mean when you say the value gap?
We have found, as I mentioned before, that there often is a sizable difference between what a private company owner might want or need in the way of sale value and current market value. Sometimes there's a close relationship between expectations and reality, but most often, because a private company has never been objectively reviewed, and because this sometimes is just a once-in-a-lifetime sort of event. Remember, with a public company, there's an evaluation taking place on a continuous basis between buyers and sellers. So that happens on a very regular basis, and that's part of the attraction in having shares in a public company is liquidity and market value. With a private company, this only happens very, very rarely. Consequently, there is no established market value, and so at such point in time, as you look at this difference of opinion, and again, until there's a completed transaction, all anybody can provide is an opinion of value. So when there's a value gap, we found this is most often the difference between the seller's opinion of value and the buyer's opinion of value. Some have referred to it as, if you look at it from a public company perspective, some have referred to it as the bid-ask gap, meaning that the difference between what the parlance of publicly traded shares, day in and day out, there's a bid price and an ask price. But in private company circles, we would simply refer to that total difference in value as the value gap, and it's an important item for any seller or buyer to have in mind. If there is no value gap, then you'll see a successful transaction completed. But most often, there's this chasm that needs to be understood and managed in order to eventually complete a transaction.
It seems, in my experience, that sellers will get a number in their mind based either on old information or not an apples-to-apples comparison. They know a competitor was bought by a strategic buyer, and there's I think a psychological element involved in that too.
Absolutely. Remember, it's an opinion of value, and that the business means a great deal to a private company owner who oftentimes has put so much into it over many years of sweat equity and personal savings and all of the effort required. And it's more than just a pure financial play. It oftentimes is wrapped into things like personal lifestyle, psychological identity, and putting a number on that is a challenge because, again, as we mentioned before, it doesn't happen every day. It oftentimes happens maybe only once in a lifetime. So it's not surprising that there's going to be a difference of opinion between what professional investors who do this on a regular basis, how they view a given opportunity versus the pride of ownership and the personal perspective. Sometimes these opinions of value can come from a well-meaning friend or neighbor with a situation that is not at all comparable, but people hear a certain multiple of earnings, or they'll look in the newspaper and they'll see a multiple of earnings as to what a public company might trade for,